Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. How do you align technical setup with the market and make it even better? If you are trading for any period, you know it pays better to align your trades with the market. Trying to be right and being against the market is a recipe for disaster, and you already know that if you tried that out. One way to align with the market is to take technical trades which are doing what the market is doing. For example, if a market index breaks support, you may look for breakout short setups in your swing trades. If a market ETF gives a trend following short setup, look for trend following short setups in stocks. How to make it even better? It is not uncommon that the market ETFs or indexes move slightly differently. In that case, you may find swing trades with characteristics of multiple market ETFs. For example, if DIA is breaking below support and SPY is giving a trend following short setup, you may look for stocks with both a flow and a breakout short setup. Q Finder allows you to do that with a few clicks, as I will demonstrate later today. Can it be made even better? Of course, yes. Q360 trades are not only technical trades aligned with the market, but their industry and fundamental scores are also aligned. QH and QVital allow you to check the industry and fundamental score respectively in 100% real time. Sometimes even seasonality using Q season may be aligned with the trade. You may find such trades in only a few minutes in 100% real time. I'll try to look for at least one such setup later today. Greetings, I'm Sagar Nandi, retired IT professional, swing trading stocks in the India and USA markets with only a single trading system, Q, that I developed myself. Disclaimer, this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. It has multiple components. I'll use several of them today. Q charts, instruments that often move the market. Dollar index, it tends to impact the market, though the inverse correlation does not always work. In the weekly, the backdrop color is bearish, shape is indecisive. Notice that the earlier bearish headwind caught the very top of dollar index. In the last market recap, we were here and looking at the breakout from trendline support, which was there at that time. I hypothesized that it was more likely to go up than come down. It indeed went up the very next day, stopped at the point where a bearish headwind appeared earlier, and then fell down. Now it is inside a triangle created by a trend line resistance and trend line support. We also have the yellow direction line support at the bottom. Friday's candle is somewhat indecisive in shape. Color is bullish because it is at a swing low and has multiple supports at this point. I am thinking that it is more likely to go up from here than not. It may not go all the way to the trend line resistance, it may go there, but at least I am expecting it to go up somewhat, and if that happens, that will put pressure on the market. Mega cap index, this week's color is bearish, shape is indecisive. This indecision is a common theme across many instruments this week. In spite of the indecisiveness of many instruments, we will try to arrive at a clear preferred trading direction after we complete the market analysis. Mega cap custom index is indecisive in shape, but color is bearish, and we also have a bearish indecision at the top. I noticed that the bearish indecision cluster appeared earlier, which led to a price pullback. Now prices recovered to the same level and stalled there, stalled at the watermark resistance with bearish indecision, bearish backdrop. So I am thinking it is more likely to go down from here. Let's see what the daily says. Daily stopped right at the trend line support, stopped right at the trend line resistance with a bearish momentum color. It is right at the peak of the triangle pattern. Looking at the weekly color being bearish, daily color being bearish, I am expecting it to break below the trend line support rather than breaking above trend line resistance. And if it breaks below support, that will also be bearish for the market. Hasn't done that yet, but looking at the two colors in weekly daily, I'm thinking it is more likely that it will come down. Market breadth, internal health check. Usually the market follows the internal health, extremely valuable, not the other way around. The percentage of stocks above 50-day moving average in market breadth total view, the broadest view of the market continues to show that this recent recovery is actually a recovery in a downtrend. Majority of stocks are still below the 50-day moving average. Not much else to read from the chart except this important signal that has appeared again, a Hindenburg omen. That shows that professionals are selling while amateurs are buying. It's not immediately actionable like some other oscillators. What other oscillator? For example, the 3-month new high low or the percentage of stocks above 50-day moving average. And it is not an oscillator, it's a signal that comes at the top that shows professionals are selling when amateurs are buying. May not mean the market or the candle chart will immediately pull back, but it is always worth taking a note that somebody, maybe not a retail trader like me, was selling when others were buying. Where did the Hindenburg come from? Nasdaq or NYSE? We'll come to that shortly. Before that, let's look at the total view custom index, the broadest view of the market using weekly daily. See the common theme of indecisiveness. The weekly shape here is also indecisive, though the color is bearish, not unlike the mega cap index. Also, not unlike the mega cap index, the daily momentum color is also bearish. Also in a similar way, it is right inside the triangle pattern. Looking at the bearish colors in weekly daily, I'm thinking it is more likely that it will come down from here, and it has also already created a false upside breakout. So I'm thinking it's more likely to come down than up from here, and if it can break the trend line support, of course that will be bearish for the market. This is the broadest view of the market. Where did the Hindenburg come from? Let's look at that. It came from Nasdaq, and the percentage of stocks above 50-day moving average as well as 3-month new high low show that Nasdaq was and is continuing to be weaker than NYSE. Nasdaq weaker than NYSE, but the mega caps were doing better for a few days at least. Maybe not the last day of the week, but mega caps were stronger, but Nasdaq was relatively weaker relative to NYSE. The same thing that we saw last week as well. If we look at the major indexes, nothing much to read. The same thing that I mentioned in the last market recap, Russell 2000 is the least extended to the upside in terms of both 50-day moving average, percentage of stocks above that, and 3-month new high low, which also means it is the worst performer. And the best performer for a while was Dow Jones Industrials. I note that Dow Jones Industrials, which was the best performer, is having the most prominent bearish divergence. As we go through these internal health checks, the case for bearish trades are adding up more and more, in spite of the weekly being indecisive in multiple instruments. Case for bearishness is going up, case for bullishness is not coming up so often. Let's look at the external view. This is how most people around the globe see the market. I look at the market ETFs. All the market ETFs except QQQ came down, not by very big percentage. All of them were down for the weekly period by less than 1%. In fact, very close to 0.5% or below that. Only QQQ went up by a small percentage. Let's look at the market ETFs from the worst performer DIA to the best performer QQQ, trying to make a case for bullish trades or bearish trades. DIA, this is what I mentioned in the last market recap. I pointed to the bearish headwind in weekly and commented that it was possible, likely even going by past records, that price would try to regain that level and then create a false upside breakout. Last week it was about to create the false upside breakout, and this week it has successfully created the false upside breakout. Again, the shape is very indecisive, color is bullish. In the daily, we have more clear picture. First thing I note is that daily also had a bearish headwind. Price tried to retest that and it created a false upside breakout at the watermark resistance and also the trend line resistance. It also had a trend line support, but as of Friday's close, it decisively broke below the support with a bearish color. Also, one thing that came to my notice that though DIA was super outperforming the market earlier, for last couple of days, 2 weeks probably, it is actually underperforming. From outperforming, it changed to underperforming, and right near the very top, right near all-time high, it gave a breakdown short setup. Didn't I mention that sometimes we'll see market ETFs breaking down? I did mention DIA also as an example because I already looked at the charts. So if DIA is breaking down support, I may look for breakout short setups. But let's continue. IWM, again the weekly is indecisive in shape, indecisive in color, neutral in color. I notice the bearish indecision cluster in daily. Always take that seriously. From there price came down, try to regain the watermark created by the bearish indecision cluster, fell down right from there with a bearish momentum color. However, there are multiple trend line supports nearby. Therefore, though it is the worst performer of the market ETFs, I am less willing to short this. I would rather short dia or industrial stocks. That is using the daily interval. Next is SPY. Again, weekly shape is indecisive. That theme is common across many instruments this week, though the color is bearish, and daily has a bearish flow signal and as well as a flow trend following short setup. Isn't that what I mentioned? That sometimes the market ETFs may move slightly differently. DIA is giving a breakout short setup. SPY is giving a trend following short setup. So I may look for either breakout setup, short, or flow short setup, or I could combine them. I could look for stocks with both breakout as well as flow short setups. For SPY, the decision is very clear. It allows shorting. It has a proper flow short setup, just like I had a breakout short setup. And the best performer of the week, again very indecisive in shape in weekly, QQQ. Color is bearish in weekly, color is bearish in daily, right at the tip of the triangle pattern. Looking at the colors in weekly daily, I am thinking it is more likely to come down than go up. However, like IWM, it has multiple trend line supports. I am less willing to short it. And this week I also added the mid cap ETF charts IJH. You could also look at the mid cap index dollar mid dot mid in Metastock. So this is IJH. Again, the shape is indecisive, but color is bearish in weekly. And here also, notice few things. The bearish headwind caught the very top. It is in a very clear downtrend. And it is also giving a bearish flow setup. Between this IJH and SPY, both giving flow setup, bearish side. Which one would I prefer? I would prefer the weaker one, and IJH is underperforming, so I'd like to short IJH more than SPY if I were trading the ETFs. The case for bearish setups are adding up. Case for bullish setup so far is 0. Let's continue with bucket analysis, pinpoints, reversal points with remarkable accuracy thanks to Dr. Jeffrey Scott. After watching whose videos, I incorporated it in Q systems, and the bucket analysis is very indecisive now. Right in the middle, 50% of stocks are above mid Bollinger Band, 50% below it. As neutral as it can be. Also the percentage of stocks above and below upper Bollinger Band and lower Bollinger Band respectively, they are not at all near the extreme level, so there is no signal there. However, Friday's sector industry stock breadth is quite bearish, and all the sectors came down on Friday. Consumer discretionary, a non-defensive sector, fell a lot. There was some economic data related to consumer confidence which came below expectation, and that did probably lead to this huge drop in consumer discretionary stocks. But across the board, all sectors came down. Materials, infotech, and healthcare came down by more than 1%. The other sectors also came down. So Friday was bearish. Let's see how the sector industry stock breadth looks across multiple periods. It shows where the market came from, where it is now, and where it may go next. I used this sector industry stock breadth last week to hypothesize that I was bearish than bullish, and this week it turned more bearish. Longer term 1 month period is still bullish, but from 1 month to 10-day it turned more bearish. From 10-day to 5 days this week turned more bearish, and 1 day 2 days are also bearish. This clearly allows shorting. Again, the case for bearish trades are adding up. Case for bullish trades, zero so far. Lastly, find a technical breadth. We only profit by buying stocks going up, shorting stocks coming down. This is very helpful in aligning trades with the market, as I will demonstrate later again. Weekly technical breadth, bearish across all the categories, doesn't allow buying, allows shorting. And daily technical breadth, not only bearish across all categories, but we also have a bearish headwind alert, only allows shorting, doesn't allow buying. Market level summary, the most important trading decision is whether and where to buy or short, or whether to stand aside. Market level summary, my last market recap conclusion was this, quote, I would rather short than buy stocks, unquote. That was timely, effective, and profitable as the market turned more bearish this week. This week, all the Q dimensions turned more bearish. Not a single one turned bullish more than last week. Everything turned more bearish. Plus, Nasdaq has one Hindenburg omen, and there are proper short setups in DIA, SPY, and midcap ETF IJH. They make the outlook more bearish than last week. So again, I repeat, with more emphasis than last week, that I would rather short than buy stocks, because that is what the market is telling. It's not objective, not subjective decision. Review of last week's trades. I shared only one short idea last week, that was MSM. That was a 360-degree short idea. If you shorted it using intraday charts, you could probably book some profit on Monday. So I identified the short setup on this day for MSM. That was a flow trend following short setup. Monday it gapped down and it recovered, not different from how the market moved, and then on Friday it fell down again with a bearish flow signal. So on the weekly basis it is down a little bit. If one took the trade on Friday, then either one could book some profit at the low on Monday, or one is still in the trade. Of course, it didn't hit the stop. It is going to be held with a small profit. It looks bearish in both weekly and daily. And the week before that, I shared only one bearish trade at that time, Honeywell. In the last market recap, I reviewed Honeywell. Let's go to the stock. This is when I think this this is when I first identified the short setup. Just making sure this is 24th and 28th, 27. Okay. This is the Friday market recap 2 weeks ago when I identified the short setup. And in the last market recap, we were here. And I mentioned that it didn't stop us out, so we would still be in the trend. Didn't hit the target also. It eventually fell sharply, and much more than the risk distance was covered by the profit. One would book profit, at the trend line support, that would be the logical profit booking point. Or one could use GTC order to book profit once the risk distance was covered. Both were possible. So again, Honeywell closed the trade with a nice profit. MSM still probably in the trade, it didn't stop out, didn't hit the target. What about this week's trade ideas? My market level view is bearish, so let's do as per the theme. Use the finder technical breadth to find trades that are both breakout trade as well as flow trade. Why? Because DIA is giving a breakout short setup, SPY, IJH are giving flow trend following short setup. We could look for either breakout or flow, or we could look for trades with both setups. Let's do trades with both setups. Let's see how long does it take. Go to the bearish setups, flag for flow, flag for breakout, generate there. I am left with 24 stocks, you can see here. So starting with all liquid stocks, about 2000 stocks, I'm left with only 24 stocks that have both possible breakout and flow trend following short setup. So let's generate the fundamental scorecard. I would like to look at only weak fundamental stocks. So let's do 1-star red. That will give me either overvalued stocks or those with negative earnings growth. Either overvalued here or with negative earnings growth. Let's continue with 360-degree trade. So let's look at their industry score from QH. Click the red bear button, that will show me industries that are either weak in score or decelerating. Both are fine. Let's go to the stocks in these industries only. Left with these few stocks. And the stock that I chose for bearish setup today is Cure, but not CURE, QURE. Unicure is the company. This is the time now to generate a one-page scorecard for Cure. I did a bottom-up analysis. Why did I do a bottom-up analysis? Because I started with aligning technicals with what DIA and SPY were doing. So this is a biotech stock, Cure. In fact, it is a Netherlands stock. It's also traded in the USA. Very overvalued, very poor earnings quality. Earnings growth is there, but valuation allows us to short. 88% of peer stocks were down on Friday. The stock is steadily coming down over 10 days, 5 days, 2 days, 1 day. Allows shorting. Funds are not buying. Analysts are bearish if you are interested in that. And I notice, which is not uncommon for biotech stocks, it has no earnings. It's not a profitable company. We know that it is in industry that is either weak or decelerating. Let's look at this specific industry score. Biotech. It is indeed one of the weakest, and over 2 days it is also one of the most decelerating. I will like to short it. And lastly, sorry, not that button. I wanted to look at its seasonality. Notice the next earnings date is 24th February. That is the last week of this month. Let's see what is the seasonality of March. It is not a deal breaker, but if it has bearish seasonality in March, that will be even more attractive. Yes, it does have bearish seasonality in March. So that is an icing on the cake, though it is not a requirement to short. And see, so far I have not yet opened the chart. I looked at technical breadth, looked for stocks with both flow and breakout setup, looked at their fundamental scorecard, looked at weak fundamental stocks in one way or other, looked at their industry score, either weak or decelerating, then found this stock. Now let's look at its technicals using charts. The weekly is very bearish in shape and color both. First thing I notice is that though at the market level, most if not all the instruments are indecisive in weekly, this is very bearish in weekly. In daily, it is breaking down below support like dia, and it is giving a flow trend following short setup like SPY and IJH. So that is combining both the weakness characteristics. On top of that, when I look back, I see that it was at jump thrust high, price extreme high, then came big move down 3. Almost always after that the stock comes down if it is fundamentally weak. After this big move down, parent of all bearish momentum day, it tried to recover a feeble attempt and then fell sharply. When you see that it is going up with small candles and falling down with bigger candles, you know that the thrust is more on the bearish side, and the Q colors make it clear when to actually take the trade. I would not take the trade on this day, on the big move down day, because the stop would be far away. So I would wait for a lower risk entry point, and that came on this Friday where it decisively broke below the trend line support. And this is a stock that is aligned with the market, and its industry and fundamentals are also weak. That is my trading idea for the week. Cure, QURE, bearish setup. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today. Was it difficult? Was it time consuming? No and no. Just as you would find almost any other day. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.